Our final esteemed speaker comes to us from one of the food and beverage giants, PepsiCo. It's interesting because while it might seem that other giants have been more interested in aligning, it might seem that other giants have been more interested in aligning with emerging brands. But in fact, PepsiCo has blazed the trail. It's PepsiCo, after all, that executed the earliest deals that initiated the move of new age beverages to bigger companies. PepsiCo acquired Gatorade as part of its deal for Quaker Oats. PepsiCo also brought on Sobe, validating the guerrilla sales and marketing tactics of John Bello, and a team that continues to guide new beverage brands. PepsiCo's got the Starbucks portfolio. In more recent vintage, the company's Naked Juice acquisition formed a unit that allowed for the roll-up of brands like IZZE, O.N.E, and KeVita, an acquisition that put the company on the cutting edge of at least one new consumer trend. So where to now? How does PepsiCo see opportunity in the beverage crowd we have here and in the larger consumer world at large? Daniel Grubbs is here. Daniel Grubbs, the managing director of PepsiCo's Venture Group, is here to offer information on that from his perspective as the head of its Ventures Group. Please welcome Daniel Grubbs.
But I just want to take a few minutes and just tell you a little bit more about PepsiCo as a whole, but the PepsiCo Ventures Group, as well as just some thoughts that we've gained over time with being involved in the emerging beverage business today. So as a whole, PepsiCo, is an organization that is global in nature, but also spans a wide variety of foods and beverages, beverages of snacks, as well as a portfolio of nutrition-forward products that we look to bring to a wide variety of consumers around the world. Today, PepsiCo, $63 billion in sales, 22 brands that have reached $1 billion of retail sales, over 200 countries, as well as over 260,000 employees. And we think of this as consideration also is for what PepsiCo Ventures is. PepsiCo Venture Group really is the agent of the organization to work in partnership with the emerging brands business community to bring the power of PepsiCo, but also for us is to learn and understand around what's happening from a trend perspective, how companies are blazing some trails. As Jeff had mentioned, we've been progressive within this in terms of brands that have become a part of our portfolio in the past. And for us, it's really important to work in partnership because we also understand there's a high degree of risk. There's a high degree of risk in working in the emerging brand space, some of the conversations that have occurred over the last few days here. And so we want to look to understand, but also find ways to bring value. So we're really there to also be significant value-added investors with these organizations. And for us, it's about finding progressive thinkers, progressive companies who are breaking the mold, and for us, whether or not they're touching on more health, more wellness, human performance, as well as just general lifestyle benefits that consumers are looking for. And so today, when we look at what we're looking from an investment perspective, one of the major key aspects is product and brand, obviously. But we also distinguish between products and brands. Products on their own are important, right? The technical innovation, the functionality, the benefits that are being derived that consumers are increasingly looking for. But just as much, the brand and the essence of what's the connection with the consumer is something that really we look for. In part, also because we think that that's something that's going to continue to sustain that business. And it's also a key function of how we continue to think about these investments, is how do these businesses become broader platform opportunities for the organization. I think it was noted in some of the previous discussions on KeVita as an example. Additionally, there's a big mindset around the companies that are operating in this space and around the capabilities that they're bringing, right? The capabilities that are really creating connections with the consumers and also elevating their business and their business model. One example in the packaging space, packaging from particularly in a beverage world, and how there's newer ways to meet the consumer and their convenience and their lifestyle benefits. But also for us, which a core aspect is, particularly back to PepsiCo, and we have a mission statement, PepsiCo, purpose with performance is how does the packaging deliver on sustainability? So there's an increased focus towards efforts around the companies we're looking at. Not just, is it just in the end game about a revenue grab, but it's also about there's a deep sense of purpose, particularly around packaging, and as well as some other dynamics. So when we think about our role, though, with these companies, it comes down to 4 aspects. One is around, we really want to support and enable them in every possible way. So we really take the time, even before the investment, to really make sure that there's a good, clear alignment on what their mission is, what their purpose is, as well as how we see it and how we think we can hopefully elevate, but also learn with them. In addition to that is we think in long-term perspectives, and this also informs how we work in partnership. It's not just a 2-3-year horizon as our mindset. Our mindset is more the next 10, 20 years of this brand and this business. And that becomes really important for us as we consider for aspects of decisions that get made into the business in the near term, right? Shortcuts that get become more associated with potential revenue opportunities. And so we also want to be mindful as investors in that business about what's the long-term aspect. We want to make sure that it's also still in the mission of the brand, mission in the company. In addition, we're very mindful of we are not the only investor in most cases, and so we need to be great partners with the other investors, particularly when some of those decisions occur within the business that are important to make sure that we can work through things together. Some of the tougher decisions and strategic choices that get made in the business. And lastly, to my point about PepsiCo as a whole, we have a depth. We have a depth of expertise across food and beverage, right? We have a depth of understanding around capabilities, around people with functional expertise. And we're very comfortable essentially bringing that expertise to our investment partnerships. So when we look to drive value, we drive it in 3 particular ways. So one is strategy and insights. Obviously there's an aspect here which is we've gone through processes of hopefully building and scaling brands. Now, but at the same time, is in partnership with the founders, is we want to make sure that we're deploying maybe similar processes or frameworks, right? In many cases about now it might be different at different scales, of course. In addition to that is there's a wealth of insights around consumer, shopper, retailer. We want to lend that, particularly when it comes to matters of choice and innovation or choice in manufacturing. We want to bring that perspective, particularly around operational. For us, the mindset here is the company's operating on the 1.0, the 2.0. How do we kind of get them to the 5.0, to the 6.0, and skipping some steps in that process by sharing our best practices, in supply chain, procurement, freight, dynamics around how to kind of work in partnership with retailers in unique and different ways, right? And then finally around market development. We're open to the idea of selective strategic market development, leveraging our distribution as well as our e-commerce capabilities in select places. The key here for us is it's not a revenue grab, right? This is really about an opportunity for the companies to test and learn in unique places that they're going to find a harder and difficult chance to get to. And so how can we be supporting agents in that? And also at the same time, that becomes helpful for them to build awareness and first mover advantage, hopefully. And so as we think about spaces, and before I do that, I just want to kind of give you a perspective on how we're very considerate of the consumer when we think of our spaces that we look to operate in. And this dynamic continually that we think of how consumers are bombarded with information from media, right, from bloggers, from friends and family, from their yoga studio, from wherever it is, right? And it's this knowledge in particularly the ones who are more nutrition forward. And as they gain this information, we recognize and understand is that it really starts influencing their beliefs, right? As well as their choices in foods and beverages. And that this is something that will occur at different stages of development. And it'll be different for every consumer. But as everyone goes through this tunnel, one of the things that we know and understand is that they don't necessarily move backwards. They continue to move forwards. So the choices where they were aren't necessarily where the future is. And so we're very mindful of that as well, is that we also understand is that there's this adoption curve. Consider it. And so some things that might not be fully adopted today, we also recognize is that there's some triggers and some components that can help in this adoption, right? So we're very open to really two big spaces for us, and we kind of break it down in our minds in this way. I mentioned spaces that we operate today and the benefit territories and the product categories or terrains, however you want to define it. But for us, is in these spaces, there's definitely a movement towards the premium, right? Driving new ingredients, new functionality associated with more, call it old standard ways of delivering, say, a set of solutions. And we're interested in all those, right? We're interested in staying up in the up in front. The other one is around white spaces. KeVita was a great example for us, as we looked at the benefit territory of digestive wellness and digestive health, and really what probiotics could do, but particularly in a sparkling form. We saw that as a unique way to move into a white space that we didn't have brands and necessarily had the right to win. So KeVita was a great opportunity for us to partner, learn, and understand into ways and into fermentation and everything. That could also be a revenue growth aspect for the company long term. But it was important for us to also be open-minded for all those white spaces. So when we look to make investments, there's a set of core criteria, but as well as some very focused specific criteria that we really think of, particularly to beverage. The benefit spaces that a lot of brands are operating in today, there's a benefit versus ingredient. A lot of companies are focusing about trying to sell an ingredient, or it's in their name, it's in their identity, and we think that is important, right? Particularly if it's also something that's maybe earlier stage or later stage in the adoption curve. But what we think has a different aspect and a different value is when you really talk to the benefits of the consumers and how it touches the consumer, right? Back to my tunnel of knowledge point, right? Because that also offers an opportunity for us as building a brand platform, that an opportunity to stretch regardless of product form, right? If you can be the brand of trust, right, and delivering on that benefit, and there's multiple ways such that you can find that brand and as a part of your day, there's more willingness and understanding. In addition to that, velocity matters, of course, but profitability, and for us, the key there is about this path. We understand that earlier stages might not necessarily be at the end stage yet on the margin and the profitability, but what's the path? What's the vision, right? And what elements are going to be put in place really to achieve that end goal? And then lastly, we love it when there's at least some consideration for the regulatory environment, right? That there's a perspective around claims or certifications, right, that get made around what the product is and what the product does, because we know it is highly in an environment today. And so the more so that the businesses can also put that some in perspective, it doesn't need to be fully fleshed, but at least mindful that they're not flaunting the regulatory aspect of things, it's very much appreciated, because we also know that long term is that's something that's going to be dealt with, right? And we think many in this room have seen that occur. So one of the last things I just want to say is around functional beverages. And the learnings for us that we've gained in the brands that we've operated, as well as looking and working in partnership with our investment companies, is there's a few key core components, right? The first is about efficacy. The ingredients, the products, the benefits have to be understood by the consumer, right? Or what's the path to help them understand that, right? What's going to be done from a messaging? What's going to be done from using a different set of influencers to really get across the efficacy of those ingredients? If a consumer doesn't understand it and they don't believe it, right, they might try, but there's not that repeat, and there's not that retention. The other aspect of this is around what can be done to potentially further elevate that efficacy. So from sensorial aspects, how do you touch on the senses, right? Effervescence, the idea of sparkling with probiotic created a totally different experience for the consumer, right? It's an aspect of touching and elevating the senses. Ginger is hot, obviously. People want ginger. Give them the ginger. Have them feel and sense what ginger does to them. That elevates it to a different way, in addition to helps them along that efficacy curve and understanding the real benefits of it, right? Don't mute it. And the last thing, though, too, is that some of these might be really niche, and they might really only serve an audience in terms of who really understands and cares about that benefit. So the more that there's also an understanding and appreciation of how does this benefit reach a broader audience, and what's needed to reach that broader audience is really important to make sure that you're succeeding from a business perspective long term. So thank you for the time today.
Daniel, thanks so much. Oh, you know just where to go.
Yeah, I've seen this once or twice.
Terrific presentation. I think the first question we got to ask off the bat is, you talk about the need state that people want. You judge by this crowd, they want THC. Are you guys looking there?
Well, look, I think that the idea is I'll just touch back into a couple points there. Even just, I think it's important to understand where things are from a regulatory. There was a lot of that discussion there. It's really important to understand where it is to understand the benefits that it's delivered. So back to this point, it's all a matter of, it's not exactly checking the boxes, but it's somewhat checking the boxes. Is it highly efficacious? Where is it from a regulatory? But also at the same time, not to speak to one benefit versus another, but it's important for us to also consider is who we are as a company. Yeah. Right? And the purpose we're after and the benefits that we're trying to deliver and the scale and resources we have to bring those. And so some benefits really fit that purpose and others don't necessarily maybe align with the long term.
So let's talk about who you are as a company, though, for a minute. I mean, it's taken Pepsi a while to get here.
Here?
Yeah,
here.
With us.
Yeah.
10 years.
Yeah.
So I want to ask, now that you are here, should we read that that there's going to be something of a pickup in the frequency of PepsiCo venture efforts?
Well, I would say I can't really. Some of the things about being here are just scheduling dynamics as well, and hopefully we can continue to figure those things out in the future. But that said, we've been active from a venture and investment perspective for an extended period of time. We will continue to be active for the organization in that way, ongoing across foods and beverages.
Foods and beverages. So tell us a little bit about, what we started the week with. What kind of involvement are you going to have on the food side as well?
I'll just say is that for us, when we think about the food space, it's equal in many respects to what I just noted. A lot of those terrains and spaces and ideas around what we're after are also very relevant from a food perspective. And for us, when we think about on the food aspect of the business, there's even more white spaces potentially from a venturing lens that are opportunistic for us. But for the other thing, back to the brand point, is that's where it's increasingly important to really understand and identify brands that have that extendability. That have even extendability not just in food, but across food that can move back and forth between
brands from a brand standpoint.
From a brand standpoint, and so for us, it's about kind of giving consumers choice, and wherever that may be. So we'll continue to kind of find the right spaces across that spectrum.
Speaking of choice, wherever it may be.
Yeah.
How do you look? Can you speak to the opportunity in food service and how that factors into some of the decisions you're making?
In terms of
possible investment and partnership.
Yeah, I think from a food service, it's one of those that we think about even the companies we've invested in today, and we have great partnerships also in our food service organization that taps into those partners. And so how can we bring those two together in many respects? So we're very open to the idea of leveraging our resource capabilities as well as our brand investments and finding ways to kind of hopefully bring those brands to the different food service partnerships in unique ways that might be more difficult otherwise.
Do you think that's something that could drive an investment?
Yeah, I think I don't think just on its own necessarily that it's, but I think we also see it as food service is a great trial generator.
Yep.
And so it becomes a key action agent to really understand is the breaking through and building awareness. You see that across the whole food service spectrum. Really is kind of And so on its own, though, necessarily, it's always an opportunity, but I think it plays a different role exactly.
KeVita was a two-step deal.
Yep.
Should we expect, is that going to be the typical deal structure we should expect to see from you guys, or?
I mean, look, I think the thing is that the thing for us is about working in partnership and where the founder is and where the founder's trying to go and trying to find the right balance, right? It's not a one-size-fits-all approach. And I think there's some things that work with some founders and some other investors. And in other ways, it's like we're open to being creative about what that could mean. So it's not a yes, not a no exactly. Yeah.
That said,
Yeah.
there have been a lot of two-step deals in the marketplace.
Yeah.
There have also been some partials and, some full M&A. And I wonder, for strategics, how do you think things are evolving?
Yeah.
Yeah.
In the two-step environment?
Or just in the overall corporate VC environment? I mean, is the tenor changing, and how?
I mean, it's changing, of course. It's evolving, if anything. It's kind of. I think there's a. I mean, I think we all hopefully know it and understand it already, right? And it's sort of. It's a way of operating and really working in a new fashion, right? To work in partnership and hopefully drive value. In some ways, also manage for risk, right? In some aspects, and I think that's understood. And I think it's not the only way too. I think the number of companies as well as finding other approaches, whether it's incubation, right, and external partnerships. And so, yeah, I mean, I think that environment has continued to evolve in many unique ways.
Now, you have an incubator
Yeah.
that you're bringing to the U.S. Can you tell us a little bit about the Greenhouse Accelerator Program?
Yeah, I mean, actually, yeah, we did the first class last year in Europe, which was great. A number of those companies have successfully continued to build those businesses and fund them in new rounds. A number of them have actually, as well as moved their businesses to the U.S. That wasn't necessarily the intention, but it's just a dynamic to understand is that those businesses have been working. As we look at that, the Nutrition Greenhouse is really a great partnership between, call it our business units as well as the PepsiCo Ventures Group, and we work in combination and around those efforts. And for us, it's a way to also bring an extension of those companies to our organization and folks who have a deep expertise and can be mentors from that perspective, but also hopefully that we're driving value at that early stage of those companies. And so it's something we're looking at driving potentially here in the back half of this year. But also I would say there's some other components you might have seen. We launched a relationship with the hatchery in Chicago within our nutrition organization as a way to really stay connected, close with entrepreneurs in that environment, as well as our team who's building those businesses in that as way. But we've also been involved in a number of other situations, Mass Challenge, as well as some other components. So.
Generally speaking, are there sort of revenue levels that you guys look to as minimums
For investment?
Yeah.
Yeah, I mean, I think the thing for us is it goes back a little bit to one of the points I made on the slides around proof of concept, right? And proof of concept in the ability to really connect with the consumer in a way such it's actually turning from a velocity perspective. And there's some revenue, of course, but there's a number of businesses who've established some revenue, 5, 10 million. And would you call it necessarily the most strategic or the most long-term beneficial 5 or 10 million? No. So I think it's also we're very mindful of potentially things that can be earlier on that curve that are actually connecting with the consumer, and we're very open to call it earlier stage than in that regard.
Do they have to be capable of being the next billion-dollar brand to get there?
I mean, I think the thing for us is, is it capable of really leading in a space that we think is meaningful? And so our brands, as we think about it, is we want them to be leaders in their space, right? Continue to be progressive. And the spaces that we've mapped out, we think are sizable businesses. And so as long as they're leaders in the spaces that we think are important, and that translates into X revenue or Y revenue, we're okay with that.
Well, I want to thank you for speaking to the next leaders in this space, because they're in this room, they're watching on live stream, they want to get involved with you, they want to do better. And I thank you for
Yeah,
helping
no,
them
thank
to
you for having
do
me,
so.
Jeff. I appreciate it. Thanks.